Good evening. Thank you so much for having joined us this night show, which is actually Business Connection. We are proud that you have continuously, taken a very good quality time with us. And in tonight's discussion, we are basically looking at issues to do with risk management profile, which we understand very well that in the work of financial inclusion, insurance and microinsurance in particular is something that is quite very key to actually work around and see how we can increase penetration level in low target market. And in tonight's discussion, I have a privilege to have Agrotoshi Makedi, who is actually an actuary in his professional forte. He is basically running a company called Risk Shield Microinsurance and Actuary Consultants. Good evening, Mr. Makedi.
Good evening. Very pleased to be here. Thank you.
Nice having you.
Thanks.
Okay. We'd love to understand very well around issues of risky management as far as targeting the low market end is concerned. How does it involve to do with the microinsurance?
Sure. So basically with risk management, the reality is, we're living in a world that is getting increasingly more and more risky. And, risks which we were not used to so much in the past is becoming a matter of fact. The risks to do with climate change being one, for example.
Sure.
But also many other risks, health risks, risks to do with business interruption, risks of epidemics, so on and so forth. So I think where microinsurance comes in is, in a nutshell, microinsurance, I would say it's insurance for the mass market, for the common people, basically.
Okay.
So one of the things we know in Zambia, for example, very small percentage of people are actually insured. I don't remember the exact percentage, but it's certainly less than 2 or 3% of all the people in Zambia are actually insured, which means that well over 90%, over 95% of people in the country have no form of insurance at all. So I think this is where microinsurance products and microinsurance solutions aim to address that gap, to basically insure the uninsured, so that people who don't have access to basic insurance services for very big risks, they receive at least some level of coverage. Yeah.
Okay, so talking of microinsurance, how important is it in comparison to the bigger, part of insurance, which we're talking of maybe bigger guys interplaying to bigger risks? Now, with the microinsurance, from your explanation, does it imply to say that it's insurance which can even take an individual person who is basically earning something less than 5,000 or 1,000 kwacha? Or how does it work for you to classify the microinsurance in this perspective?
Yeah, that's a great question. So actually, I would say in Zambia currently, there isn't really a very firm definition of what is microinsurance. And indeed, this applies to most countries in Africa, in Asia, originally from India. Even in India, until recently, there wasn't really a firm definition of what is microinsurance. But to go back to your question, I think this is one of the areas where, the insurance regulator, which is the Pension and Insurance Authority, can play a role to really define how they mean, what they mean by microinsurance. But essentially, to go back to your question, it's possible for individuals to also access these types of products. But the issue is they may not be, in a position to buy such products directly from insurance companies, or even the insurance companies may not be in a position to offer those individuals insurance, for a very small value. But they can still access insurance provided they do it through groups. Okay. So, for example, if we are currently working with some microfinance institutions in Zambia who are financing tens of thousands of small-scale farmers, for example. Okay. So those farmers who are receiving microfinance loans, they are also receiving some level of insurance coverage. So, for example, we are doing a funeral insurance product with some of the microfinance institutions. Okay. So that's one way in which people who are, earning a relatively small amount of money can still access insurance, provided they do it through groups or through institutions like microfinance or agribusinesses or farmer organizations and so on.
Okay, so how is the insurance overall looking like in Zambia? Of course, we are scaling down to the importance of microinsurance being a subsector of the bigger broad of insurance in this case. So now, generally, if you are to make comparison, the pace at which microinsurance is taking force, do we see a very good appetite in terms of participation and also penetration levels as far as microinsurance is concerned? Maybe the beginning point would be the overall focus of how insurance is looking like. Then you scale down to microinsurance. How is it like?
Sure. Yeah, so it's, I think overall with the insurance sector, I mean, there have been quite a lot of developments over time. And I would say overall things are improving. I mean, the sector is developing, although maybe the pace of change, is a bit slow, but it is getting there. I mean, in Zambia, a lot of the insurance sector is still, focused on, sectors like mining, for example, and then, of course, things like motor insurance and property insurance, life insurance, health insurance, and so on. But that tends to be generally focusing on, people in cities like in Lusaka, in the Copper Belt, and Livingston, and other places. But if you look at insurance in the rural areas, I mean, even close to Lusaka, if you look at Chongwe, Rufunza, these areas, and you go to, some of the districts and some of the towns, and most probably a lot of the people don't have any insurance coverage at all, and neither are the insurance companies really offering products there. So I think that is where the gap is. I mean, so when it comes to microinsurance, it has progressed quite a bit, but I would say there's a long way to go as well. Okay. But there have been some, quite critical milestones which were achieved. I mean, there's been a lot of work done with private sector companies in Zambia. So when we started our company about 10 years ago in 2015, and we work and we still continue to work with a lot of the private sector entities like banks, microfinance institutions, agribusinesses, farmer associations, and so on. But we've also worked with government in the past years. Okay. And I think this has also been a key milestone that, for example, the Ministry of Agriculture, they have integrated some forms of index insurance within the FISIP scheme, the Farmer Input Support Scheme. And indeed, that is actually reaching about 1 million farmers every year because the subsidy goes out to approximately, 1 million farmers. Of course, there's a lot of scope for improvement in the way it's done, but nevertheless, it's reaching a large number of farmers. So I would say that's very, that's quite key, the role of government here as well.
So, Mr. Makedi, if I get you correct on the part of the Minister of Agriculture in regards to the index insurance and linking it strongly to the FISIP or Farmer Support Program, is it under microinsurance or it's a broader base of insurance? How would you classify it?
I would say it's more of microinsurance than conventional insurance. Okay. Why? Because it is targeting small-scale farmers. Oh, I see. And so although the product may not be officially classified as microinsurance currently, but nevertheless it is microinsurance. It's focusing on, these are small-scale farmers with where the total value insured might just be, under 5,000 kwacha, maybe 2,000-3,000 kwacha. So the value insured is not very high. Consequently, the premium is also small. So we're talking of premiums of maybe 100, 200 kwacha, something like that per farmer. Okay. So it's definitely small scale. It's targeting small scale farmers, and then also the type of product which is index based, be it weather index insurance, which has been going on in Zambia for the last 12 years now, and also yield index. These are products which are really applicable more for small-scale farmers. They can also be applied to the large commercial farmers, but they're more relevant for small-scale farmers. So yes, I would say it still falls under microinsurance, although it may not be officially classified as microinsurance currently.
Okay, maybe as a matter of getting deeper into this discussion, I would love to, understand very well, when you look at the critical component requiring classification or reclassification of some of the, microinsurance sort of, component. In the case now, where do we classify and what value can we talk of when we're talking of microinsurance? And what value in terms of premium are we also talking of when it comes to microinsurance? Sure. Do you have a certain benchmark that really is a workable benchmark that we should be able to say this classified to this side of microinsurance?
I see, yes. Well, no, it's a very interesting question. So actually those, so just to give an example, I mean, in some countries, I'll give an example from Asia, Cambodia, which is also a developing country. There, when it comes to microinsurance, the insurance regulator has actually specified that I think they use a threshold of about $5,000, something like that, as the value insured or the sum insured. So what they say is if a policy is, within this threshold, then it can be classified as microinsurance. Now, I think that categorization has not fully happened in Zambia yet, but that could happen in the near future. But I think more importantly, to go back to your question, with microinsurance, there are, apart from the value insured and the premium, there are many features which makes it very different compared to, the conventional insurance, such as, the products, as much as possible, they have to be simple, which unfortunately is not always possible, but yeah, that should be the intention, to keep it very simple, to keep it affordable. So in microinsurance, there's a lot of focus on willingness to pay, affordability, what do small-scale farmers really want to pay, or what can they afford? And beyond that, many other features. The products may not have very excessive deductibles or very long waiting periods. They should not have many exclusions. So as much as possible, they should be client-friendly or customer-friendly. Of course, we know when that is done from the risk perspective, the risk also becomes high for the insurance companies. Then to balance the two sides, then the products themselves might have to be done somewhat differently. So for example, I'll give a quick example on health insurance. With health microinsurance, typically, the coverage is generally not very comprehensive, but it might cover only people being hospitalized or spending a certain number of nights at the hospital. Why? Because if the coverage was quite comprehensive, and given that it also has to be quite simple and client-friendly, then it will become very risky for the insurance companies and very expensive, or they would just stop doing it. So instead, the focus has been to have limited coverage, only covering certain forms of hospitalization.
Okay.
So, yeah.
Maybe the other question could be just to explore a bit around this, and this being an interesting component as well in terms of line of focus around microinsurance. What basically really classified? You mentioned of exclusion in terms of certain product that you really have to target. Do we have a limitation on the microinsurance on what to cover, and also based also on what to cover, do we have variation in premiums as well?
Yeah. So there's no real limitation in that way, but I would say generally microinsurance products, both in Zambia and other countries, they tend to cover, very, let's say, very severe risks, or, the risks which are most essential risks, if we think of it like that. So typically, microinsurance products tend to be focused on agriculture, because we know the agricultural risks are extremely important for food security of the country, as well as the livelihood of millions of people and so on. So that certainly, that would be in scope. Health as well, especially severe health-related problems, and life as well, if a person passes away, accident, disability. So usually it focuses on these essential risks. But having said that, there is not really a limitation. You could also, and there have been microinsurance products which have been covering, for example, I know in some countries in East Africa, in Rwanda, for example, there are some products which covers, the boda drivers. They have their motorcycle taxis,
Yeah, sure.
and it actually covers if there's an accident or there's the risk of the motorcycle itself is covered by microinsurance policies. So it can also cover. There are policies which covers traders and small businesses for the risk of fire, the risk of theft. So it can be way beyond just these, these risks I mentioned earlier. But at the end of the day, there are some limitations in a way that, I mean, for example, you wouldn't expect to see a microinsurance product that's, let's say, covering, a very expensive Apple laptop, because, I mean, that would be a mainstream insurance product, not really a microinsurance product.
Oh, I see. Yeah. Okay, so Mr. Makeji, looking at the number of areas that you have really tackled based on experiential, life that you have led around insurance, is there any untapped potential that you see? And if it's so, are you also responding your work in regards to the policy structure that are being framed up as we speak? Maybe also can relate it to the 2021 Insurance Act. How is it sitting with your experiences so far?
Yeah, so, well, I think, there's a lot of untapped potential out there. In fact, it's mostly untapped still, I mean, both in Zambia as well as other countries. Okay. I think one of the maybe challenges that we face as in the insurance sector is there are not, I mean, of course, different insurers have been playing a role in in actually providing these products, but nevertheless, I think more insurers need to come on board, more professionals, more actuarial people as well, but also people with other skill sets. But to go back to your question, I mean, I think there's a lot of untapped untapped challenges which are out there. There is, the whole environmental challenges that we face as a planet now, I would say. That is, of course, insurance is not the only way of dealing with it, but insurance could be one of the ways of, transferring that risk. So when you look at risk management, going back to your first question, there's, avoiding the risk or carrying that risk and so on. But there is also this aspect of risk transfer. And insurance and reinsurance are actually, forms of risk transfer which can be done with the financial markets. So I think a lot of the climate-related risks, there's scope of insuring those, but also to do with the environment. For example, Zambia is one of the most, forested countries in the world, actually, which is, I think, something we should be very proud of. But then we also know these forests are, they're often being damaged by fires, by deforestation, and so on. So could there be a role that insurance can play to help manage the forests and national parks in the country? So, I would say those are also areas.
So in terms of the dynamic systems within insurance, are we safe to say the microinsurance has also got a part to play around reinsurance? Does it fit into that as well?
Yes, indeed. So reinsurance is actually very critical because for many different reasons, but one of the main ones is that some of these risks, when they occur, it affects many people at the same time. I mean, this is exactly what we saw, unfortunately, in the last farming season when there was drought experienced in Zambia and other parts of Southern Africa, and also other parts of Africa. And the point is, so that what we saw with some of the products that we were doing, the premium that was collected that year, let's say if it was $100,000 for a particular product, the claim would have been $500,000 or $400,000 for that same product. So we were looking at claims to premium ratio of 400-500%. Now, you could see that if that risk was not reinsured properly and with good reinsurance companies, insurance companies would really struggle to pay those claims, or even if they were able to pay those claims, there would be long delays, and they might even go into financial problems as a result of paying those claims. So I think this is where reinsurance can be an effective tool, because by having reinsurance, the insurers would not be carrying all that risk themselves, but they would actually be doing their own risk transfer to the reinsurance companies. So a lot of the microinsurance products, or a lot of the products linked to agriculture, to index insurance, they are actually heavily reinsured. Okay. There are local reinsurers who play a key role in that, and then very critically also international reinsurers. And I think another area is, of course, to do with technical expertise, because the reinsurers, they also have, experience in other countries and even other continents. So they can also bring some of their learning and technical expertise, which they can share with the insurance companies.
Okay, now diving into technological aspect of this sort of insurance, how creative and innovative are you indulging in the microinsurance as far as it's concerning looking at the consumer appetite driving toward technologies? Are you also looking forward, or is there any platform that so far has been created in actually combating the gap that we should be able to see? Are we responding to the advancement of technology?
Yeah, that's a great question again, and a key one, because the world going forward, and also for the last few decades, it's all being driven by technology. I would say yes, technology is being adopted to a large extent, but there is a lot of scope for further improvements there. So I'll give you a few quick examples. When it comes to weather index insurance, one of the things that, we started weather index insurance in Zambia from 2012, about 12, 13 years back.
So you mean you are the one who did the FISIP?
Well, initially, yes. Yeah, we were the ones who also, linked the product to FISIP. And
fantastic.
And then, but the FISIP happened much later, around 2017, 2018. But even 5-6 years before that, we had started working with the private sector aggregators. And,
fantastic.
But there, actually, a lot of technology is being used. For example, satellite data is used for the estimating and monitoring of rainfall. And this technology is really crucial, because I think back when we started, I think the whole country, there was only about 20 or 30 weather stations. And some of the weather stations are literally hundreds of kilometers away from where the farmers are. So it's very difficult to apply, to monitor the weather using only rainfall gauges or weather stations. The role of the Zambia Meteorological Department is still crucial even for these types of products, but nevertheless, one needs to use satellite data to improve the monitoring of the weather conditions. So the use of satellite data, I would say, is a key area of the application of tech. And indeed, in this case, I would say schemes in Africa, in the African continent overall, there's been more use of satellite data compared to Asia, for example. I think driven out of the necessity that there were not many rainfall gauges to start with. But beyond the satellite data, technology is also being used in some cases for monitoring, for recording data observations. So we also do yield index insurance in some countries.
So are you taking premium also using technology as well? And how is it being used?
Yeah. Well, not currently. We're not using, for example, the mobile payments ourselves.
Yes.
But we have used that in the past, and in some cases that is being done as well. The reason it's not used so much yet is because a lot of these products are purchased on a group policy approach. So meaning that so let's say if you have 20,000 farmers being insured, they would not actually be paying the premium themselves, but perhaps the financial institution that is financing them, or the agribusiness that is working with them, would pay the premium, and then they would collect it from the farmers at some point at the end of the season, or when they recover the loans from the farmers. So, but to answer your question, mobile has also been used. Even recently, it's being used for doing claims payments. So when claims are being paid, mobile money is being used for doing that. And I think going forward, we'll see more and more AI, artificial intelligence, being used as well. Already there are some tools that were being used in countries like Nigeria, where they're using AI for for the processing of health insurance claims. So I would anticipate in the next, quite soon, maybe the next even the next couple of years, or within the next five years, we will see more and more AI-based tools being used in the space as well.
Okay.
Yeah.
Okay. Now, when it comes to obviously the product diversification that you have also hinted at the beginning of our program, do you think digital transformation in terms of product development is a key driver into this?
Yeah, definitely. I mean, so with the digital transformation, there is so again in Zambia. When we first started back in around, some of the earlier experiences we had in 2012, 13, around that time, actually there was a lot of partnership with mobile network operators in introducing not agriculture but other types of insurance products, and even more recently some of the mobile companies have been involved in that. But I think what is perhaps missing is having a consistent plan for the mobile companies and the fintechs and the other mobile service providers to be involved. There have been very good achievements done in terms of engaging with these tech companies and with the mobile network operators, the telcos. But nevertheless, it's not been done on a very consistent basis. But I think going forward, there will be scope for doing more of that, definitely.
Okay,
yeah.
So in the wake of dramatic events like climate change, obviously we're also looking at the policy, changes that we see from time to time. How are you working around microinsurance in regards to climate resilient models? Do you have plans that are quite smart and strategic plans that should be able to plug into a good element of insurance? How is it playing out from that perspective, especially when you look at the climate change?
Sure. Yeah. So I think the key is to have products which are also being reviewed and which are being adapted on a regular basis. So typically, when we are developing these products, it's not like it's done once and that's it. It's done on an annual basis, on a seasonal basis. The products are developed and fine-tuned as we go along. So, for example, just to give a few quick examples of how we factor in the effects of climate change. So when we are, designing and pricing the product, so being an actuary myself, I do all the product design and pricing myself. And but the point is, we look at the trend going forward. So in certain areas where maybe droughts are becoming more frequent, or maybe floods are becoming more frequent in some other areas, we factor that trend into the pricing as well. But also we adapt the product design, the choice of the thresholds at which the payouts would start, and so on. So through the pricing and product design, you can adapt the products to some extent, also taking into account the change in the dates of the season. As we know, in years gone by, the rains would start even as early as October, November. Nowadays, we're lucky if it starts in December, January. So those are examples where the products would have to be, modified as we go along to make them relevant for the effects of climate change. But beyond that, I think what is really important is to diversify and to have this kind of insurance product in different parts of the country. Because again, as Zambia, I would say, one very fortunate thing in Zambia is that there are different climatologies. It's not, as we know, the southern part of the country, that it's relatively dry. But again, if you look at the northern part of the country, they receive a lot of rains. So it's important when these insurance schemes are done to ensure all the 10 different provinces and as many districts as possible. Because if the risk is diversified, then even in a year when there is a bad drought happening in some districts, other districts might be fine, or they may not suffer as much. Yeah.
This even now begs a question in regards to FISIP. How were you working with that variance, having that diversity on the table? we're talking of a different weather pattern in Northern Province, maybe Southern Province, across the whole entire country. You could find a different or a compendium of cases in this case. How were you working out? And also in relation to your professionalism, you mentioned to say you're an actuary. Obviously, I would love to understand also, as you answer the variation aspect, how does it work out also to have this combination of the statistic and the financial aspect in your professionalism?
Sure. So, related to, if an insurance scheme is implemented in different parts of the country, like the FISIP-linked scheme has done, it's so really the aim should be to take into account the climatology and even when it comes to the crop, the yield or the productivity in different parts of the country. So what is considered to be a good yield in Choma may not be a good yield in Mumbwa, for example. So it's important to factor in these differences in yield, differences, and the same applies for rainfall, of course. So that's one way in which it has been factored in, which is to look at, to base it on the climate, on the very local climate that is experienced, rather than, the whole country or even the whole district, for example. But that has been something that we did, for example, on FISIP some years back. We looked at at every single Ministry of Agriculture camp, and there was close to 2,000 different camps in the country. So for all 2,000 of them, we modeled the product so that it's in line with the rainfall pattern and the rainfall levels in each of those camps.
So you're doing mapping, in short.
Exactly.
Okay.
Exactly.
Okay.
Mapping, risk clustering, and so on.
Okay.
And and I think this is an area where so I think that kind of goes into also what actuaries or statisticians and even other professionals can help with, which is really to come up with these zones and to come up with, to make estimates of basically the frequency of the risk and the severity of the risk and so on. So I think, actuarial mathematics or actuarial stats, it's a subject that is relatively new in Zambia still. Okay. But of course, it is being taught in some of the universities here already. Okay. There are a few actuaries in the country, but I'm hoping in the next few years we'll see many more people becoming qualified actuaries. But even before they qualify as actuaries, I think anyone who's working in actuarial science, can contribute a lot in terms of making sure.
How complex is it for one to, go and study this? What are the bases that one should be able to look at into this, course?
Sure. So, just to maybe give a quick example, based on my own experience, the actuarial, so I qualified as an actuary from the UK. Okay. So in the UK, so it's basically a professional qualification, similar to becoming a chartered accountant or barrister and this kind of. So, but with actuarial studies, or in order to become an actuary in the UK, you need to pass when I did it, there was about 15, 16 exams. And these are professional exams. Many of them are very mathematical and statistical. And then you have others in economics and accounting and risk management and so on. It's difficult, but I don't think it's not as difficult as sometimes people think it is, but it just takes time because you need to pass these exams, and more importantly, you need generally you end up working full time while you also do these exams. So when I qualified back in 2010, about 15 years ago now. Oh, sure. So when I did, before that, I was working in the UK and. In a full-time job with an insurance company, and at the same time I was studying and doing these exams. So I think that is an area that in Zambia, I'm hoping that we see more people qualify as actuaries. Again, in order to do so, one of the key, I would say, requirements or success factors would be that the employers, like the insurance companies or the pension funds, the banks, they should also support the actuarial students by giving them maybe some financial support for their study materials, supporting them with their exams, giving them some leave to study, because without those it becomes very difficult to pass the exams.
Sure. Okay, so on that note, I would love also now to reflect back into the practical aspect of the industry. We understand very well that insurance keeps blessing also with a lot of development and advancement in terms of reformation and many other moderations. Are we speaking of microinsurance fitting into the development of Zambia, or are we still lagging behind the silent war? Where are we sitting in terms of microinsurance as far as the sector development is concerned? Do you look something optimistic, promising to see that it will actually get to a certain productive sense of results?
Yeah, sure. Yeah, I think, I still feel optimistic about microinsurance after many years. I mean, I've been working in microinsurance for about 12, 13 years now, since around 2012, or even 2011, actually. And of course, there are lots of challenges and frustrations in the sector. I mean, much like any other sector, I guess. But overall, I still feel optimistic, because one thing I've seen is, microinsurance, essentially, a lot of it comes down to insuring people who have not been insured before. And, when people get insured, and more importantly, when they also see the benefits of insurance, when they receive a claim payout, or where even if there's no claim, but they understand the product they've bought and they appreciate the different aspects about the product, that leads to financial inclusion. And of course, when claims are paid out, and if they're paid out quickly enough, even if they're small claim amounts, for the beneficiaries, for the customers, it still adds a lot of value. It helps them to manage the difficult situations they're in. So I would say it can play a key role in financial inclusion, in overall development, in people, once they experience some form of microinsurance, might then be interested in looking at other types of insurance, maybe even long-term protection plans like pension plans, maybe even some forms of savings. So overall, it can lead to more financial inclusion. And I think another very interesting aspect is that it also reduces risk in a way, because because it is addressing at least some of the key risks. It makes it easier for banks, for microfinance institutions, for other investors to actually invest more in the informal sector or with small-scale farmers. So we have actually seen, this is a reality over the last 5-6 years with some of the financial institutions we work with, because this insurance is there, they are actually able to invest millions of dollars in Zambia every year, because they know that, okay, there is some form of insurance available. May not be perfect, but there's something there. Okay. So even they are able to, raise millions of dollars in the international markets. Sure. And actually invest in small-scale farmers, because that overall risk has reduced. So I think more of that needs to happen, and it needs to happen in a more, that process should be made more efficient. But certainly I think insurance can help with giving investors confidence as well to actually invest more in Zambia. Yeah.
Okay, your last word under 1 minute.
Well, there's lots of things to talk about, but I think overall I would encourage, anyone wanting to enter the microinsurance sector to certainly go for it. And it doesn't have to be, it can be linked to something that you're already doing. So maybe you're already working for an insurance company, or you're a consultant, or you're working for a bank, and or any other organization, for an NGO even, or a development agency. I think it's certainly worth considering microinsurance as one of the tools of risk management. Okay. So I would encourage it, certainly.
Thank you so much. On that note, we know that insurance is a good protection cover to mitigate risk management. And on that note, we've come to the end of this program, as we were looking into aspect of the importance of microinsurance solutions which are being offered in the market. From me, Kelvin Chisanga, and the rest of the team at Millennium TV and the management, we say good night, and see you next week as we come with yet another interesting topic that shall be able to come forth for you. Thank you so much for having spared time with us. Good night. Goodbye.